Hello everyone, this is Gopesh here from Alpha Quark, and we have Pratik also who's joining us from Alpha Quark. Hey Pratik, say hello to our
Hello.
audience.
Hi, Gopesh.
Hello. So it's lovely to talk to you today evening. As you know, there's a recent concept paper that SEBI brought, which is set to redefine how advisory businesses operate in India. And it is an opportune time because the Indian markets are growing a lot. A lot of investors are coming to the market, and I think there is a big lack of awareness about how investors can make better returns beyond mutual funds. So with that, let's get started. And first of all, Pratik, if you can talk a little bit about what do you think are the objectives behind this concept note? What is this concept note all about?
So let me take a quick step back, Gopesh. Basically, we can talk about different kind of asset classes, but just to give a very small introduction about what is really happening in the financial markets, right? So there has been people who have been very skeptical about the financial market for a long time. Basically,
Hmm.
after
Hmm.
the Harshad Mehta scam happened,
Yeah,
people were very skeptical, right? And then a lot of people did not invest in stock markets because of those kind of negative
correct.
news. People's money basically, some people's money doubled, tripled, quadrupled, and
Yes,
whatnot. But some people also lost a lot of money basically, because of which people were not very interested in stock markets
right,
basically. And there were a lot of advisors, who were like mom and pop kind of advisors, who were not really advisors. They were just saying that yes, go and buy this stock, go and
right,
sell that stock. That kind of
right,
an advisor were there. That kind of an ecosystem was getting built sometime in
right,
2010s, 2000s and 2010s
right.
basically. At that point in time, SEBI said that no, this has to be a regulated market.
Hmm.
Right?
Hmm.
Not everybody is qualified to provide advice. Not
Hmm.
everybody can give advice. Basically,
Hmm.
there has to be certain amount of qualification that a person should have to
Hmm.
be able to provide advice. And
Hmm.
that's when the SEBI started regulating people, saying
Right.
that this is the way it has to be done. Right.
Right.
So now, in 2020, once again, what happened is that 2020's decade, basically, at the beginning of the decade, what happened is that SEBI said that, there has to be little more regulation, basically, because maybe a lot of people are coming into the
Hmm.
advisory umbrella, and a lot of investors are also coming in.
Hmm.
So, with respect to investor protection, SEBI thought that yes, we have to have some more regulation
Hmm.
that has to be there. So
Hmm.
they basically said that graduate is not good enough. Basically, you have to have a post graduation degree.
Hmm. Hmm.
And for example, even advisors who were there in the market, they had to get the post graduation degree.
Correct. Correct.
Think about it, like somebody who is 50 years old, he has to get a postgraduate degree. Basically, he has been in the industry for 30
Right.
years, 20 years, but still he has
Hmm.
to get a post graduation degree. So that led to a lot of resentment among different advisors, and the
Hmm.
advisory community as a whole started feeling that, we are there, we are trying to do some good for
Hmm.
people, we are
Hmm.
kind of the money doctors,
Hmm.
but
Hmm.
SEBI is regulating us in such a manner that it is
Hmm.
becoming very hard for us to do
Correct.
business,
Correct.
right? So that was basically the context. I mean,
Right.
if you ask me the context, that was kind of the overall context.
Right.
With all these pushbacks that
Hmm.
SEBI has been facing from the advisors, the
Hmm.
RAs and the RIAs.
Hmm.
Now, again, a lot of people may not know who is an RA, who is an RIA, right?
Hmm.
So let me also give a brief about that, basically,
Hmm.
right? So both the RAs and RIAs are kind of, well, RAs are not advisors
Hmm.
technically; they are
Hmm.
research analysts,
Hmm.
but they are also SEBI registered.
Hmm.
SEBI is the governing authority basically in
Hmm.
India, and these RAs, the research analysts, they are also analysts who basically research about stock. They
Correct.
provide some sort of recommendation that these are the good stocks, and this is why these are good stocks.
Hmm.
Right? They
Hmm.
provide very good rationale for
Right.
why these are
Right.
good stocks
But
basically.
they cannot give one to one advice. They can give one to many advice. Yeah.
Exactly,
Yeah.
exactly.
Yeah.
So they can give one to many advice, and the
Hmm.
RIAs are people who try to understand your financial background.
Hmm.
What is it that you are doing at this point in time?
Correct.
What kind of asset classes you are interested in?
Hmm.
What is your life goal basically?
Hmm. Hmm.
Based on that, they try to provide some advice, saying that
Correct.
these are
Correct.
the, this is the way you should do asset allocation, right? So
Hmm.
that is
Hmm.
how RIAs normally try to do it basically.
Right.
So there are RAs which are who are research analysts, and RIAs who are like registered investment advisors.
Right. Right.
Just by the name, it
Right.
seems like that they are registered investment advisors.
Right.
It's not just stock advisory; it can be multiple kinds of advisory.
Correct. Correct. Yeah.
So now, with respect to the Indian markets, you can see that Indian markets have gone up substantially, right? And with that happening, a lot of people have made good money. A lot of people have also not made good money. Basically, maybe
Yeah.
somebody would have bought stocks which have not gone up that much in
Right.
value. Somebody would have bought the great stocks,
Right.
basically. So, but at the same time, it is the Indian market is maturing, basically, because there came a time in 2010s, 2015s, and so on, when people started saying that mutual fund sahi hai, right?
Hmm. Hmm.
Mutual fund is a very good thing to have.
Hmm.
Right?
Hmm.
Now people are realizing that, in addition to mutual fund, stocks as a asset class is a very
Hmm.
good to have thing,
Hmm.
basically.
Hmm.
Like, if you pick the right stock, if you are able to
Hmm.
pick the right stock,
Hmm.
then you will be able to make much higher return compared to what you are getting in other asset classes,
Correct.
or
Correct.
even in mutual fund, for example.
Correct. Correct. Yeah.
So from that perspective, now SEBI has come in. SEBI has started saying that yes, there is a requirement that market should have more IAs and RAs, more
Correct.
RIAs and more RAs, basically. Now, this concept note comes with that perspective, that how do we get more people interested to become RAs and RIAs, basically,
Hmm. Hmm.
and how do we ensure that they have the minimum level of qualifications and the certifications that is required,
Hmm.
so that innovation is not stifled. At the same time, the hard-earned money of the investor is also protected to some
Hmm.
extent, right?
Hmm.
So that is where I think SEBI is coming from, and they're
Yeah.
basically trying to relax a lot of
Right.
things that they had done. For example, they had said that without post graduation, you cannot even become an RA
Hmm.
kind of thing,
Hmm.
right?
Oh,
Or
so let's dig deeper on that, right? So, interesting point that you brought in, right? So, clearly, the objective is that while the market has grown from around 3 crore investors to 10 crore today, the number of IAs is actually decreasing, right? From a few around 1200 to some around 900 now. So, clearly, when you look at it, the perspective of mutual fund distributors, which are more than 2.5 lakhs, or insurance agents, which are like again a huge number, around 25, 27 lakhs. For stocks, there are only that many people who can provide good advice, and not just stocks, a more holistic overview, right? So the objective behind this was to ensure and enable wider availability of quality investment advice to India's large and growing investor base, right? And at the same time, ensuring professionalism, independence for these advisors, and overall ensure that fintech innovation and the outlook on usage of technology, new age business models, the regulation should be conducive to those, right? So, but let's dig deeper in terms of just the regulations aspects, right? So, can you talk a little bit about the eligibility criteria? What has changed? How does it enable more people to become RIAs and RAs?
sure, sure. So when we talk about the eligibility criteria, the first eligibility criteria for SEBI was that you need to have minimum of post graduation,
Hmm. Hmm.
and then even after that there was an experience requirement,
Hmm.
basically.
Hmm.
For RAs, that was not that pronounced, but for IAs there was an experience requirement as well for five
Correct.
years.
Correct.
The experience requirement is completely done away with. You
Hmm.
do not need to have an experience, basically,
Hmm. Hmm.
because we had been hearing from many people, from many RAs, RIAs, that you know SEBI has been considering experience in brokerage as experience.
Correct.
I have been working in financial services industry for such a long time, but my
Correct.
experience is not considered
Correct.
experience. So people were kind of
Yeah.
thinking, what exactly is the regulator doing, right?
Hmm.
So I think that's a very welcome step, saying that
Hmm.
experience is not a requirement anymore.
Hmm.
But then what will be the requirement? You will
Hmm.
ask me the question that if experience is not a requirement,
Hmm.
if post graduation also, which was a requirement, will not
Hmm.
be a requirement, let's say
Hmm.
graduation becomes a requirement,
Hmm.
then in that case, how do we ensure that good people get into this?
Hmm. Hmm.
So for that, what SEBI is trying to do is there will be a certification requirement that will
Hmm.
still be there. You will
Hmm.
still have to do the base NISM certification.
Hmm. Hmm.
And earlier there was a lot of regulatory burden
Hmm.
on RAs and RIAs to keep doing these certifications every 3 years,
Hmm.
right?
Hmm. Hmm.
And these certifications are probably the same, like most of the content will be the same, maybe
Hmm.
80-90% will be the same, and maybe some part would have changed, basically.
Correct. Correct.
Now SEBI is coming and saying that when the certification requirements have to be fulfilled, first of
Hmm.
all, you do it once,
Hmm.
and after that, whatever increments have happened in the next 3 years,
Hmm. Hmm.
you just take that incremental things,
Hmm.
so that you are not burdened with compliance. Our
Hmm.
objective is to enable you.
Right.
I mean, SEBI's objective is to enable the
Right.
ecosystem. It's not to stifle the ecosystem, right?
Right.
So that
Right.
is why they are coming up with this kind of suggestion.
Makes a lot of sense.
In, in fact, there is one more important thing which was
Mm-hmm.
also very, very important for
Mm-hmm.
people. So for RIAs who are corporate, let's
Mm-hmm.
talk about corporates first, basically,
Mm-hmm.
because a lot of people want to take that corporate license because
Mm-hmm.
they are structured in that manner. So
Mm-hmm.
for RIAs, they had to have minimum 50 lakh of paid up capital, basically. And
Mm-hmm.
that capital is something that has to be there all the time. You cannot
Mm-hmm.
spend that capital, right?
Mm-hmm.
And for RAs, it was like 25 lakhs for,
Mm-hmm.
again, for corporate RAs.
Mm-hmm.
So that requirement is done away with, basically.
Mm-hmm.
Now what will happen is that they will just have to keep a balance with the SEBI,
Mm-hmm.
and that will be much lower than that 50 lakh kind of barrier, basically. The
Mm-hmm.
maximum that it can go up to is 10 lakh rupees,
Mm-hmm.
which is kind of the proposal. Obviously
Mm.
it has not been passed into law, but it is the
Correct.
proposal.
Correct. Correct. No, fairly progressive changes that SEBI has introduced. But thinking about the current RIAs, right? How should they think about it? If many people are going to join in, is it going to adversely affect their business prospects? So, how do you suggest existing RIAs should look at these changes?
So sometimes I would say competition is good for the market.
Mm-hmm.
Why do I say that? Because when you have competition, then there is more awareness, basically. At this point, if you go and ask 100 random people, basically 100 or
Mm-hmm.
1000 random people, I'm very much sure that 90% or 95% do not know who is an RIA. They will say that who is a RA, basically.
Mm-hmm.
Say, okay, what is this new term that you're talking about? Are you talking about stocks or something else? That
Mm-hmm.
is the reaction that you will get, right? So people do not even know about it.
Mm-hmm.
On the contrary, you have got 1 point or more than 1 lakh or 2 lakh kind of mutual fund distributors.
Mm-hmm.
Everybody knows about mutual fund.
Mm,
So
mm,
competition in a way is actually good for the industry,
mm,
basically.
mm,
Like the more number of RAs or REAs basically
mm.
come in,
Correct.
there will be more and more awareness among people, basically. Just
Mm,
like mutual fund Sahi Hai became the tag,
mm.
similarly advisor Sahi Hai could become the tag, basically, 2 years
Correct.
from now.
Correct. Correct. No, absolutely. And as I talk to several friends of mine, right, there is a genuine need for someone to handhold them, to guide them, and a trusted person. But many of the times they don't know anybody else other than some agents from the bank or someone who would have misaligned incentives, so they can't fully trust them. So I think if the awareness grows, that honestly is the biggest problem that this industry faces. And having many people having this being discussed, more and more people coming under the SEBI registration umbrella, that is going to solve for this ignorance. So the overall pie, of the overall size of the pie would grow, and that is going to be helpful for even the existing RIAs.
Right, right.
Yeah.
And if you think about it, there are 10 crore investors,
Hmm.
basically.
Hmm.
10,
Hmm.
obviously, not everybody is a high net worth individual, or not
Hmm.
everybody is investing a lot,
Hmm.
basically.
Hmm.
But at the same time, if you look at the number, there are 10 crore investors at this
Hmm.
point in the market.
Hmm.
That 10 crore may become 20 crore in the next
Hmm.
5 years, or
Hmm.
maybe next 3 years, who knows, right?
Hmm.
So,
Hmm.
and with that number of investors, everybody being left at the mercy of the market is probably not a great thing, basically.
Yeah.
It
Yeah.
should be that there is somebody, like there are so many CAs in the market, right?
Right.
Does
Right.
that mean that CA has so much competition that CAs are not making anything?
Hmm.
It's not
Hmm.
like that, basically.
Hmm.
CAs always have business
Yeah.
because people know about CAs.
And that is what we also observe in mature markets, right? Like in mature markets, it's fairly competitive place, and most of the people have moved ahead, gone beyond mutual funds, and they seek advice from some of these advisors, and that's how the ecosystem grows in a healthy fashion.
Right,
Yeah.
right,
Yeah.
right.
The other aspect, sorry, were you saying something, Pratik?
No, sorry, you go ahead. I'll continue that thought later.
Yeah. So the other aspect which I was also reading about is that the corporatization, right, the mandatory corporatization which was needed at 150 clients before, now that has moved to 300 or 3 crores in fees, right? That is also quite progressive. Because you don't, if you want to continue as an individual RIA, you should be able to. 150 was a little too restrictive, so that is also a welcome step in terms of business prospects for existing RIAs.
Yes, yes, exactly.
Yeah.
Not everybody wants to become corporate at the day one. Basically, not
Yes.
everybody wants to take that private limited license.
Right. Right.
So 150 is too restrictive a number. Somebody may have studied for a long time and they have observed market for a long time, and
Right.
they are coming in, and if we are restricting them at 150, that may
Right.
be too restrictive. Basically, 300 is a welcome step, definitely.
Right. One area where the concept note has been a little less clear is about the fee model, especially for asset classes which are legal but are not under SEBI purview. For example, real estate, gold, etc. Right. So, uh, while what is welcome is that SEBI has specified that the AUM to be considered for the fee model is just the SEBI classes which SEBI sort of regulates. How do you look at that? Should we expect SEBI to bring some more clarity, or is that an opportunity for RIAs to provide more holistic, more comprehensive services covering all other asset classes, which in turn would also help them improve their own revenue prospects?
Yes, so that is an interesting aspect that you brought up, Gopesh. Uh, it's probably not that clear from the paper that what exactly can happen with other asset classes. Let's say there is an RIA who wants to invest in both in mutual funds, in equities, in gold, in real estate, and in other asset classes, right? There are so many asset classes. Maybe art, for example, that is also an
Correct.
asset class,
Correct.
right? So now the fee structure is something that SEBI probably cannot prescribe, basically,
Hmm.
because it's not under their purview. Stocks is under their purview. The capital markets is under the purview of SEBI.
Hmm.
But
Hmm.
real estate, for example, is not under the purview of
Hmm.
SEBI.
Hmm.
Maybe if you are doing real estate, you'll probably have to maintain a little bit of arm's length distance between the two
Hmm.
entities or
Hmm.
two kind of businesses, basically.
Hmm.
But you should be able to charge that amount from real
Hmm.
estate.
Hmm.
Brokers charge, let's say, 1% from real estate.
Hmm.
Maybe advisors can also charge that kind of a thing.
Hmm.
That's
Hmm.
something that is a little bit of unclear area, I would say.
Hmm.
It's
Hmm.
not that gray also, it's a little
Hmm.
unclear,
Hmm.
but maybe it will not be a big dampener or
Hmm.
anything like that, basically,
Hmm.
because it's not coming under the purview of SEBI, so they should
Hmm.
not be trying to regulate that also.
Hmm. Hmm. No, absolutely. Absolutely. The other thing which was very interesting was this clarity around model portfolio for RAs. So the concept note clarifies that the confusion around whether RAs can do model portfolios or not. The intent has become clear that that is okay by SEBI. Anything you'll add on that?
No, it's a very welcome thing actually, because let's say if you are not giving any quantity to client, then the client has some sort of a doubt that, okay, what kind of a
Hmm.
analyst are you? You're
Hmm.
not
Hmm.
an advisor, fine, but what kind of an analyst are you? And
Hmm.
why should I be paying you, basically?
Hmm. Hmm.
So model portfolio gives them some sort of a idea that, okay,
Guidance. Yeah.
10%,
Yeah.
20% of this has to be allocated over here, basically,
Right.
right?
And that is not personalized. So I think the guiding principles still being that one to many versus one to one. So as long as RAs are giving their own on the basis of their research, they're helping with model portfolios, which is applicable in a one to many sense. I think that's a very clear understanding, and it anything which is transparent and clear helps the business grow.
Right, right,
Yeah.
right.
Yeah.
Indeed.
True. True. Uh, One thing which caught my eye was SEBI talking about AI and the new age technology, which again is very progressive. As we all know, that financial markets is one of the first areas which applies these technologies to give difference in performance to achieve better alpha, right? So that is again a very welcome step by SEBI to start permitting these registered advisors to use and avail of some of these technologies. So, how do you think about that? What are some of the things to keep in mind as advisors think of using these technologies?
So I think from an AI perspective, it's a very, very broad thing. Basically, somebody may be using AI just to do customer profiling, basically, right?
Hmm.
So
Hmm.
that is where SEBI has also been highlighting some of the risks that, okay, if you have been using AI for
Hmm.
customer profiling, some of the personal data of the customer may actually get leaked to
Hmm.
some of the
Hmm.
systems,
Hmm.
right?
Hmm.
Which is a risk that SEBI has highlighted
Hmm.
basically. Whenever you are using systems like ChatGPT or
Hmm.
similar kind of systems, right? The data privacy may not actually be maintained that
Hmm.
much.
Hmm.
So that is one of the risks that SEBI is making people aware of. At the same time, you can see that there are other areas within the
Mhm.
AI which is in use in the market for a very long time. So
Mhm.
if you think about institutional investors,
Mhm.
uh, I remember clearly there in 2012 there was a big crash in the market, and
Hmm.
that
Hmm.
was basically called the flash crash.
Hmm.
That flash crash basically happened because there was some algo who did some error, and they basically spiked the market in such a wrong direction that
Hmm.
everybody's stop loss got triggered. The
Hmm.
market fell suddenly, and in couple of minutes the market was back up
Hmm.
basically.
Hmm.
So those kind of crises we have seen, like
Hmm.
1 decade ago also we have seen those kind of things. We have seen algo trading, we have seen a lot of other things.
Hmm.
Along with that, AI has matured a lot basically.
Hmm.
Right now, it's not a decade ago maybe there were some systems which were there, systems were pretty mature, but today AI is very mature basically.
Hmm. Hmm.
AI is in a stage that you can I mean, a lot of things have been commoditized. For example, you will
Correct.
have AWS kind of service
Correct.
where you can actually do a lot of your calculations. You don't have to maintain your system in house.
Right.
You will still be able to do some computation. So, a lot of things are basically possible at this point. It's
Hmm.
not just generative AI. When people talk about generative AI, they just think, or people talk about AI, they think about generative AI, they think
Hmm.
about ChatGPT.
Hmm.
But AI is not about ChatGPT only, right? There are so many other things in AI
Correct. Correct.
which advisors can actually leverage and use to the benefit of the investors basically.
Right.
And
Right.
that's I think a welcome step basically. And again,
Right.
the SEBI has been SEBI is guiding the investors and the advisors that you should be aware that there are certain risks which will be there whenever
Yes.
you are using an AI system, and that is
Yes.
something that you should be transparent about.
Yeah, and they're very clear about accountability for any of these things still lies with the advisors. So it cannot be just that using technology would dilute ownership or accountability in any manner, which is again very important to make sure that we're using these technologies responsibly.
Indeed, indeed,
Yeah,
right.
yeah. So, so let's say if you're an advisor, if you're observing these changes, what would your advice be? What should they do? How should they go ahead?
I think that's a difficult question that you asked, Gufis. But I would say, from an advisory perspective, nothing changes immediately.
Hmm.
The only thing that changes is that there is a lot of positivity about the market. There is a lot of positivity about what advisors can actually bring in. And
Hmm.
SEBI is now acknowledging the fact that the number of advisors has been degrowing. Instead
Hmm.
of growing, it has been degrowing.
Hmm.
While the
Hmm.
market has been growing, the investors have gone from 3 crore to 10 crore.
Hmm. Hmm.
The number of advisors have gone down.
Hmm.
SEBI is kind of acknowledging that. SEBI is
Hmm.
saying that, we don't want to make your life harder by
Hmm.
making more and more compliance for you,
Hmm. Hmm.
which is a very, very welcome step. So
Hmm.
advisors should think of it as a very welcome step that SEBI is dialing down a
Right.
bit on regulations
Right.
while still maintaining the quality,
Right.
which means that there will be a big market that will basically open up.
Right.
Investors will basically come into advisors.
Right.
Maybe at this point, it's kind of a push marketing. A pull marketing may start happening basically.
Hmm.
If the
Hmm.
advisors are performing well, there may be a pull marketing that will start happening now.
Hmm. Correct, correct. And the way I was looking at it, right, just building upon some of the things we discussed, the biggest problem is ignorance. And with this opening up, hopefully that awareness problem would be solved to some extent. And this is also an opportunity for the associations of advisors to take this up and be more proactive and be more vocal about what is the value which is being offered. And at the same time, as more and more people probably would come under the SEBI registered umbrella, the performance angle, how you differentiate, would also start becoming important, right? So just anyone sending messages on Telegram versus someone being SEBI registered, someone whose performance is being verified. And as I say that, I also want to highlight the performance validation agency which SEBI is talking about, the user experience that your customers are having, that would start becoming differentiator, and this would help true winners emerge and gain more value as typically happens with most liberal markets, right? Like as India also went through liberalization, there was a fear that, hey, if India opens its doors, is it going to negatively impact the domestic uh, service providers, right? And but with liberalization, we saw that more the competition, everybody grew. It was not a zero sum game, right? So I think one of the things which, if I was an advisor, probably engaging proactively with SEBI, sharing their feedback, highlighting concerns, also highlighting how this could help them, would be probably a step in the right direction.
Totally, totally, I agree with you.
Yeah. Great. So I think with that, we'll wrap this conversation up. I hope this conversation was helpful to our listeners. Stay tuned. We keep bringing interesting content for advisors, investors, and people who are interested in Indian markets. Thank you. Have a good day.
Thank you, Gupesh.